Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I am a coach with Schwab, tuning in from my hometown of North Bay, Ontario, about 250 miles north of Toronto. Yesterday, we had our big Thanksgiving dinner. And today, I'm excited to be sharing some things with you. So we've got a lot to cover today. We're going to talk about, I have 5 positions that we already have on in our accounts that need a little attention. So we're going to have a look at those. And then we have a whole bunch of new examples to consider. Today is sponsored officially by the letter A. To go back to my Sesame Street roots, because when I was looking for potential setups to discuss with all of you today, I brought up the S&P 100 and didn't make it out of the letter A's before I had a page full. So it's not that I have such an affinity for that letter of the alphabet, but that's where we are. So I want to thank each and every one of you who continue to show up every Monday and Friday as we link arms together in this intermediate level class, place lots of trades and follow up on them, and go through the disciplines and the thought processes that help make us a more informed and successful trader. So hello to Rob and Ray and Riceberg and Frank and Josh and Life in the Fast Lane. I love some of these handles, and Rocky and Frank and DR and Will and Chris and Regina and the rest of the gang. Thank you all for being here and for being so participatory in the chat. We also have the privilege of having Connie Hill with us. Connie Hill is a friend and a fellow coach, and she understands all of the strategies that we are talking about here in this class today in spades. So if you have a question, don't hesitate to ask. You're also going to want to make sure you're following Connie and I in the land of X. Her handle, Connie Hill CS, mine, Barb Armstrong CS. So be there, be square. It's another free resource that you have access to and can take advantage of. And we're posting content there that we think you'll find interesting and helpful on a daily basis. Keep in mind, we do a lot of options example trades in this class, and options carry a high level of risk and aren't suitable for all investors. And keep in mind that everything we do here is for general information purposes only, not to be construed as a recommendation on the part of Schwab or myself. We're using the Paper Money software application on the Thinkorswim desktop platform, and it is a brilliant place to learn and become familiar with not only how to place trades using that Thinkorswim platform, but how to make sure that you understand what you're doing with respect to your trading strategies. There are some nuances and differences, and we'll discuss those as we go along. Okay. So I do a very, very brief market overview in this class because there is a Trader Talks webcast at the open of the business day when the market opens at 9:30 Eastern, and those are recorded and they go into a lot of depth. And so I highly recommend you check those out. We're going to spend most of our time today placing new trades and then managing the trades that we have. If you have never been to a live event, I will be at all 3 of these events, actually, along with Ben Watson and a host of others. I mean, we literally fly people in from all over the country. Next one is in Anaheim on November 22nd, the weekend before American Thanksgiving. Then we've got an event in Houston, a 2-day technical analysis and options workshop. And then the weekend before Christmas, we've got an advanced option workshop in Miami. These are free to sign up. They're free to attend. We'll have the coffee on in the morning. We'll provide breakfast. We'll provide lunch. And for the market drive, there's a nice reception at the end of the day. So if you've never been to one, I'd highly recommend that you check it out. Chris, I'm thrilled that I'm finally going to get to meet you. So someone in the chat is saying that they'll be driving from Dallas to Houston. We do events in Dallas every year as well. Jerry's going to be in Houston also. So I'm thrilled that I finally get to go to Houston and meet so many of you that I missed last December. Okay, so we have got like a ton to cover. So I hope you have your beverage beside you. You've already been to visit, the bathroom if need be, and you're ready to buckle up, and you've got your pen ready and your fingers ready, because I do like to make this, at least a semi-interactive class. So let's bring up the S&P, and spoiler alert, we may be looking at AVGO. So when we look at the S&P 500, I mean, this, index is up after quite a great fall in the first quarter, that ended April 6th or 7th. It's up almost 13%. And we had a big down day, which had, Chicken Little like doing warm-ups and, doing her exercises to get ready, to get out and run around the yard. And then this morning, what pattern is this? From a candlestick perspective, if you're new to all of this, you'll want to check out, I've done a bunch of short videos on candlestick patterns. This is called a bullish harami. And so this is a bullish configuration on the chart and doesn't require confirmation even, but the expectation is that we would see that tomorrow this index might continue to rise. And of course, there are no guarantees. Now, up 16.6%, and we had that huge down day on Friday that had everybody's hearts aflutter, and then today, bullish harami. How about the Dow? Now, the Dow is different from these other two indexes in that it's based on the price of the stock as opposed to the market cap of the companies, but bullish harami again. Do we see a trend here, my friends? In this index, it's in third place, but up 8%. This year. And then we come to our friend, the Russell. This is our small cap. And if you didn't see it, I did a short video last week on some interesting facts on the Russell 2000. I learned stuff putting it together. So if you haven't checked it out, just scroll back in my X feed. I posted it last week, but it was kind of fascinating. So again, bullish haramis all around. And how about the VIX? I mean, it skyrocketed on Friday. Any guesses on what the VIX is doing? Yes. So now we have a bearish harami, which is saying like, hey, it's already down almost 10%. It's back under 20. So back in this range of where it spent, a lot of the last 6 months at least. It's hard for me to get that to click in sometimes. Yeah. But it kind of hit its ceiling. It's been up here a few times and is already halfway back down to a more normal range. Okay, so there we are. Now, let's start by looking at Apple. And again, like I get asked all the time, where do you come up with these examples? So I just brought up the S&P 100. Sometimes I use the NASDAQ or the Dow, but I started with the NASDAQ 100 and I said, okay, what's Apple doing? And, when I looked at this, it was actually, it's an inverted hammer at a support level. And it was, it's up $3.62 over where it closed. And if we look at this pattern, after I've zoomed in here, we had this big bowl type pattern. Think of a latte without a handle, right? So we had this big bowl type pattern and then it broke out and then it kind of just, went a little sideways, came back to retest this 30-day moving average. And we've got this either a hammer at a support level, that's how some might characterize it, and some might say, well, it's also a harami, a bullish harami at a support level, and this 30-day has been acting as support. Either way, that's bullish. Now, when we see these circles, it means earnings is coming up. That's coming up on the 30th. So what if we said, hey, I'm bullish on Apple. This is a bullish trend. What I'm going to do is buy a long call because my expectation is that this is going to go back up at least to where it's been trading around this. Maybe we don't even make it 259, but we're basically looking at having this, our expectation is that it might swing back up to maybe like this 258-ish level. So how might we put that in? Well, if we're looking at November, now are we intending to be in it till November? So somebody's asking what the difference is between the bullish and the bearish harami is where it's occurring. And so, this is considered a bullish harami because we had a down day, it came down to a support level, and then we have this candle is bullish and inside the candle of the previous day. On the VIX, something came up to a support level. So hit its head on, came up to a resistance level. And today So we would call this a bearish Harami because it has dropped and we have a red candle inside the body of this big white candle. That's the difference, candle-wise. It's like flip it and reverse it. Didn't somebody sing a song about that? So anyway, we're going to come out on Apple. And if we're looking at doing a swing trade, do we intend to be in this for a long time? We do not. So why wouldn't, if we're thinking we only want to be in this for, we're expecting to be in this for maybe 5, 7, 8 days at the most. If things go swimmingly, maybe 2 or 3 days. So why not just buy 18 days? And it's because time decay is going to be a factor. So if we just switch this and bring up our Greeks, we can see that theta here, and we're going to be looking at the 255 strike. Why is that? Because that's what we can afford. So it's an out of the money strike. But if we look at this and we say, okay, if we do this 255 strike, our theta on the October 31st is 20 cents a day. So this option is losing 20 cents a day in value. If I come out to November and we'd have to look at this 260 strike, we're losing 11 cents a day. So it's half. Okay. Yeah, Chris is saying that song is by Vanilla Ice. So thank you for that. I'll have to go look that up. Yeah, I'm just writing that down. Okay, so this is why we're giving ourselves more time. And so we're going to look at this strike, the strike we can afford. So, why are we picking this strike? It's because it's what's in our snack bracket, because we have an account that has almost 31,000 in it. We don't want to risk more than around 500. And I'll put an ish on this. We started with 25,000 at the beginning of the year. And so, if we risk 525, maybe as high as 550, but we're not going to go to 660, 670. Okay. Dang, there's one of the ones that we were going to vote on. I guess the market voted for us. Okay, so we are going to buy a single, and actually we're going to buy custom with an OCO bracket. And so why are we doing that? Well, we're doing a swing trade. And what's our target going to be? Well, we said we're going to make it around 258. So our target's going to be 258. What's our exit going to be? Our exit with a swing trade is going to be based on the price of the stock, of the option rather. So we're going to say, okay, we're going to make a market order that's good till canceled. We're going to make both of these good till canceled. We're going to click on our disappearing, reappearing sprocket and say, hey, if and or when, I like to just say when because I'm an optimist, but it might never get up to 258 again. That's a possibility. But if and or when this gets at or above 258, we would like to take the money, whatever money there is, this is worth, and run. And then if it loses half its value or more, so half of 290 would be, 490 would be 245. If it gets to the point where it's only worth 245, then it's not going in the right direction or not going fast enough. And a time decay is starting to eat our lunch. How many of these are we going to do? One. Why? Because that's what is in our, as I like to say, snack bracket. We don't want to risk more than 500. And you might say, and I know, even some coaches might say, well, our position size is 500 and we're planning on exiting the position if it goes below 245. So we're really risking only 245. So we could do 2 of these. We could do 2 of these, and you could do it that way. But if this stock were to gap down, the amount we could actually lose is all 490. So it's just a more conservative approach to say, I'm only going to position size based on what is possible to happen, not what is probable. Because there's no guarantee this is going to trigger a market order if it goes to 245 or below, and then it'll sell it for what we can get. And if it gaps down, we might only get $1 or $1.25. And so that's the logic behind that reasoning. But you're going to create your own trading plan and you're going to have your own set of rules. So we're going to put this under long calls. And this is a swing trade. Okay. Fire in the hole. Okay. And so we're in. Now we do have another long call that I wanted us to look at. That was one of the 5 I wanted us to look at. And that was Newmont. And somebody said, in the chat, why don't we look at gold? Well, it's on a rocket, and you are correct. I'm not going to argue with that. But, if I come in and we look at this, our target was 89.25, and it must have hit 89.25. Our high for the day on this was 89.34. So it went up and hit it. And we're now out. And how did that pan out? Well, we were up 30-some%. So if we come over here, you can see here that it hit our target. And this was a swing target that we placed on Friday. And it has filled our order. And if you want to say, how do you remember it was a swing target? Well, I checked this morning. But if you click, remember where I just put that note in the confirmation tab, that line, this is where you'll see it. And so if we come to our account statement and we type in NEM, so we bought this for $465, and then we just got out of it. It hit our target. We got out of it for $655. So how much did we make? Well, we did one of these. How come we only did one? Well, because that's what, we could afford given our risk rules. And so we made $195 on a $465 investment. And, we aren't going to look at this one. So $655 minus $465, that's $190, times 100. So we made $190, our return on our risk. How much could we have lost? Even though we put the stop in, we don't take that into consideration. And I didn't do this math ahead. Well, sorry. I had my phone anchoring. I'm on a little table here. Oh, that's funny. Okay, let me bring up my little calculator. 190 divided by 465. So that was a 40%, 40.8. Call it, we could round up to 41. But a 40.8 return on our risk. Okay, and we placed that trade on Friday, and now we're out on Monday. Yeah, somebody's saying, 190, I'd call that a double. Anybody watching the championship series? I know that the LA Dodgers play tonight, and the Blue Jays played last night. Unfortunately, they came in second, but if you're a Seattle fan, you would have been happy. I think they beat them 3-1. So, okay, so moving on. So that was NEM, okay? And with NEM, yeah. So could we come back? I know we're straying from our letter A, but if we thought this was going to continue to go up, could we place another trade? We could. And you might say, well, could we place a swing trade? Well, the previous high here was 89.37, so you wouldn't place a swing trade, but what might you do? Well, you could do a trade with a 1 ATR target, and this is where the 1 ATR target can come in handy. Okay, when a swing trade isn't appropriate. All right. So if we wanted to do that, we could set that up. But I have a list of things, so we aren't going to necessarily do that one as an example today. But we've done Apple, and then we've looked at NEM. Okay, so let's go and look at ACN. So ACN, and this is just a 3-month, but let's kind of back it up a bit. So do we have another bullish harami? We do. You know, because, well, one might argue it's a bullish harami, but we've had a stock that's been downtrending. This stock is down 31% year to date. And so even though we have a bullish harami, and it's been uptrending since this low here of 229 back on September 25th, when we back the truck up a bit and we look at the trend, this is a downtrending stock. And so we don't want to necessarily, if there are lots of other opportunities out there, why would we want to do a bullish trade on a stock that it's not clear that the downtrend it has reversed? And so we have to, when we look at these things, say, ooh, bullish harami. Yeah, but what is it in the context? Yeah. Okay, so Jerry is asking about the 1ATR trade, and so is Lewis. Let me do another example of a swing trade, and then we can go and we can do that 1ATR. But I've done lots of those in the past, and if you go to the playlist, you can see that. But I'll show you how to find the playlist, and I'll show you how to find an example trading plan as well. So here's AMD. So AMD, unlike ACN, this is up 78% year to date. So anybody want to argue with me about whether or not this stock has been moving bullishly? It really has. And you know, it recently gapped up, and then it didn't even, like, it did pull back dramatically along with the rest of the market on Friday. But, you know, we had this one-day pullback. It didn't even come all the way back to the bottom of where it gapped up from. And then today we have this bullish harami. On Thursday, this hit an intraday high of 240. So could we kind of look at this and say, maybe put a target of like 239? You know, like on this day, it came up to almost 236. On this day, you know, it hit 240. On this day, the high was 234, and right now it's at 218. So we maybe we don't even want to make it 240. We could make it, you know, our high here was 235.87. So we could make it 235. You know, and so you don't have to go all the way, you know, all the way, May. We could say, well, how about we make it 235? And you might say, well, would we make enough? Well, come on. So let's look at how much we could make. So let's come out to the trade tab. And if we say, okay, what can we afford to do here if we come out to the November monthlies? So we'd have to come out here to this 260 strike. And you might say, like, is that even worth doing? Because this is, you know, there's a lot of volatility around AMD, which makes it expensive. And these are $10 wide when we come to the monthly. So if we look at this 260, we'd be paying $590. If we come out to the 270, we're paying, you know, $450 to $460. So really, this is where we want to be. And you may say, yeah, but I'm only going to get a 20 cent, like this delta of 19 or 20 is telling me if the stock goes up by $1, the value of this will go up by 19 cents. But it's 19 cents on $4 as opposed to 54 cents on $18, which is almost 4 times as much. So does that make sense? So it's not that if you buy something out of the money that it can't be profitable. There's lots of contracts here at 15-cent bid-ask spread. So we have a tight bid-ask spread. And so if we wanted to place this trade, we would come down again to buy custom with OCO bracket. We're going to put in our target, and our stop is going to be at half the value of this. So if we called it 260, that would be 230. So if this goes below $2.25, which is about half, and then we're going to put in our sprocket to say, hey, if this goes at or above, we're going to make it 235. So it's not even, that intraday high. It gets up in the neighborhood of that previous high. Confirm and send. And where is it currently trading? 219. So we're going to put this in our long call group. Now, could we buy shares of stock? We could. And we could put in a target. And we could put in the same OCO, target and exit. We could do that. So this is a swing trade. Would anybody like to see that? Because we could do 2 examples. And what's the advantage of doing it with stock? Well, the advantage is there's no time decay. So we don't have to worry about theta or time decay. The disadvantage is it takes a lot more money. Like here, we could lose $450 to $460. Now, if you want to see what that might be worth, we are going to come to Theo, Price, and Mark. So we put in a target of 235, right? Which is what, $16, about $16 higher than where it is now. So the first thing we're going to do is click reset. And then we're going to say, hey, if and or when this goes up by $16, that would put us at our target, right? 235.30. It would put us 30 cents over. So that's good. Well, don't think it's going to do that today. What if it did that by Friday? We had one that did it in one trading day, our NEM. So then we're going to click anywhere outside this box and we're going to scroll. So we bought the 450, we bought this 270 strike. So what this is saying is we paid about $460 for it. It would be worth potentially, and this is think thumbnail estimate of about $764. So we'd be up about $3 on a $465 investment. If you're saying, well, what would that be as a percentage? We can come, I'm going to close this and bring up our calculator. So if we said, okay, if this came up to 764 divided by our 465, that's about a 37% return. I think I messed that up. 764 divided by 465 should be, yes, this makes more sense. About a 64% return. Likewise, if it went down $16, now we have put a stop in to say, if it goes down by 50%, we'd like to exit. And of course, who knows what will happen with volatility and all those other things. Yeah, I made the fonts larger so you can see them. Okay, somebody asked how I get the year-to-date change on my chart. So if you come to X, and we come to my profile and scroll down, here is a list of some common scripts in this pin that I have posted to the top of my feed. And so here's the one for that year-to-date, month-to-date, week-to-date chart. It's LJYKF, all uppercase, lowercase C3. And then the next page is a description of how to add them if you don't know how to do that. So that's where you get those. Okay. The other question was, there was a question about a trading plan. So if you come to Trader Talks, and in the bottom right corner, if you haven't subscribed, you're going to want to do that. Subscribe to the channel. What comes up first, let me just make this, well, here, we'll do it this way. Yeah, so what comes up first is the current class that's being taught, or webcast that is playing. And then if you scroll down here to, I'm just trying to find them. Yeah, trade management mini sessions. And I have created a bunch of short candlestick patterns. What is a bearish harami? You'll see a new one post today, and it will both be in this trade management mini sessions. It will also be in the getting started with technical analysis. But if you come down here, here's an example trading plan for a long call with a 1 ATR target. And, you know, this trading plan would look similar for a swing target, except the target and the exit are going to be different. But some of the parameters on, you know, a trading plan is going to have 5 components, you know, what to buy, when to buy, how much to buy, when to sell or when to exit, both if the trade goes for you and against you. And then the 5th component is routines. Like, do you look at this daily? You know, how are you managing it? And so this trading plan includes all those components for 1 ATR. And with a swing trade, our target and our exit are a little different. You know, and anyway, so that's that. And then there's another playlist for this whole trading a smaller account series. So you can go back and look at some of the classes that would have 1 ATR or short-term targets in them. Okay, but vast amount of content here that you can access. Okay, so speaking of 1 ATR targets, we had a trade on Intel. And so with INTC, we did a 1 ATR trade, and we also did a buy right covered call. But here was our 1 ATR target of 40.38. It came up to 39.65. We placed this trade in this class last Monday. And we are still, let me get rid of some of these lines that are just kind of distracting. And we are still in this trade, sadly. You know, we'd rather be out of it, but it's kind of started going sideways, right? So our deal with the 1 ATR is at the end of each trading day, we go in and adjust the stop to, and this is a stock that's under $50, so to 20 cents below that day's low. So Friday's low was 36.30. So we are going to go in and adjust the stop to 36.10. So how do we do that? Well, we're going to come to our activities and positions, our working orders, and we're going to come down to INTC. And we did 2 of these that we were going to compare, one at the 43 call and one at the 38, you know, at that strike. So we're going to cancel and replace our order, click our sprocket and say, hey, this should now not be 35.47. It should be 36.10. So our target is still the same, 40.38, or if it goes at or below, 36.10. So this is our 1 ATR target, and we've adjusted the exit. And today, if we're not out, we'd go and we do the same thing. If the low is a higher low, we move it up. If it's not a higher low, then we do nothing. So if you want to see that again, here was our first one. We're going to come in for this second strike because we did 2 trades and we want to manage them in the same way. We're going to cancel and replace. Sprocket, this would be 36.10. 36.10. There we go. Easy peasy lemon squeezy when you know how to do it, right? And so this is our 1 ATR target and adjusted exit. Okay. So those were our 2 long calls. Now we also did a long put with a swing target on Lulu. And so if we scroll down and have a look at that, you know, we're up 4, well, we're losing some of our gains on that one, but let's come and look at it. It was So, and this is a stock that's down 56%. So it's moving counter to the market, but our goal on this was just to follow the trend. And so we put this one on Friday as well, and it's just continuing to mosey on down that path. And there's our swing target just above this previous low here. So we're going to let it do its work. Now, at the end of the day today, if it doesn't hit our target, we're going to move our stop up. And in this case, to $1 above. Why $1? Not because it's a put, but because it's a $167 stock. So if it's over $100, we move it up by, we move it to $1 above the high of today. Because we either want, you know, to make our money and get out, or to take our loss and get out quickly. We don't want to lollygag about and, you know, have death by 1,000 theta cuts. And so that's why, you know, we manage it in this way. Okay, so that's our Lulu management. Okay, let's go and look at another one. We looked at AMD. I said we'd go back and look at a 1 ATR. Yeah, so the two new trades that we have placed are AMD and Apple, and we did calls on both of those. Okay. And so let's go back to NEM. Although I still have more in the letter A category. So if we look at this, could this be considered an entry? Because we had a pullback, like, so some might say, well, I see a bull flag, and today this is still a live candle, so it could change, but we have a close above the high of the low day. So Friday was the low day. We now have a close above the high of the low day. So that would be considered a legit entry for a bullish trade. When is earnings? The 23rd. So it's coming up. So, you know, but not until next week. And so we could say, well, you know, if we did a 1 ATR target on this, that the plan would be to be out. And so if we say, okay, here's NEM, what is our 1 ATR? It's 252. How do I know that? Well, that's what this is down here. And if I hover over today's candle, it says over the last 14 days, the amount this stock moves from the high of the day to the low of the day is $2.52. So we're looking for a move to the upside of $2.52. So if I go back to hovering over my candle, today's high, 89.34. So if I add 252 to that, that gives me 91.86. And then if I look at today's low, that's 87.56. Today's low, 87.56. And if I subtract 252, that is 85.04. So those are going to be my targets and my exit. So how did I come up with the 20 cent to adjust my exit? If you go and you watch that short video, Rob, on that 1 ATR trading plan, I think the way we just made up numbers. So you could experiment with this and see if it works for you, and if not, adjust your own trading plan. But we said if the stock is under $50, we make it 20 cents. If it's between 50 and 100, we make the stop exit 50 cents below or above, depending on whether it's a put or a call. And then if it's over $100, we make it a dollar. And we just made those numbers up, but they seem to be working. But you know what? If they aren't working for you, then you can change it. Okay. So if we wanted to do this instead of as a swing trade, because we're already at almost the high at 89.17 and the previous high was 89.37, we're going to come to the trade tab. Again, what are we looking for? We're looking for something we can afford. And so if we come out to November and we say, okay, we don't intend to be in this long, but we want to minimize time decay. So we are going to look at buying. And we could make this buy custom with OCO bracket like we did the others. Or another way of doing an OCO order is to say, I'm just going to buy a single. And then I come down here to my single order, make it first trigger sequence. I right click, create an opposite order, and then I can put in both the target and the exit at once, because both the target and the exit with a 1 ATR trade are based on the price of the stock. Neither one is based on the price of the option. So we're going to say, okay, we're putting in our target first. Our target is 91.86. 91.86. And our exit is if it goes below 85.04. So 85.04. Okay. Okay. So when I hit save and I look up here, it's like, okay, 89, does 91.86 make sense? Yep. Does 85.04 make sense? Yep. And then I'm buying a call because I'm bullish, right? Right. Like, I actually say this out loud to myself when I'm putting these trades on. Like, and it's just another way of confirming what's going on in your head. I'm not doing this like I'm crazy. I'm just doing this like you want to reinforce, because being a human being, there's always that potential for error. And so our mark is at 91.86, above where it's currently trading, or below 85.04, and we're going to manage it the same way. Right? Right. Although this time it's going to be 50 cents with our 1 ATR, because it's over 50, it's between 50 and 100. So long call. And if you're saying like, oh, I don't remember how I came up with this, this is our 1 ATR target. And you could say, well, why make it 1 ATR? Why not make it 2? You can make it whatever you want, but it's going to take longer. The expectation is that it might take longer for it to hit, a 2 ATR target, right? The other thing you can do is put it on your chart. And so we're going to come out to the chart and we're going to say, well, we've already hit this swing target. Yay, us. So we're going to make this 91.86. This is a different, it's a similar form of wash, rinse, repeat. We're still bullish. We did a swing target the last time. We took our money. And we're going to show it on the right. Okay, so we didn't get through all of the letter A's that I had on my list today, but I saw somebody had said, like, hey, has anybody looked at Amazon? So here's Amazon. And, this is a 3-month chart, but when we look at it out a little further, it's been kind of going sideways, and you might say, well, would we want to do a bullish trade? Well, it's bouncing off a support level even within this sideways range. So if we did a 1 ATR or a swing trade back up to this previous high, might that be a possibility? Well, it's a possibility. How about AVGO? Uptrending. This one up 52% year to date. So definitely an uptrending stock. Could we do a swing trade on this? It's at 358, close above the high of the low day. And the target would be 374. Yeah. Yeah, Laura's saying the letter A gets too much love. Could we, sometimes I just start in the middle, or I start at the end. I just flip the whole list. So today I just started with the letter A, but is that another potential example? The answer, it could be, absolutely. And then if you were looking for something bullish, might I suggest this fine Adobe, which is down 25% year to date. And some might argue broke below a current level of support on Friday and is continuing to fall today. And could we put in a target close to the similar low? So guys, that's a wrap for today. I didn't see a survey in the chat, so Connie, correct me if I'm wrong on that. But if you haven't subscribed to the channel, you're going to want to do that. If you would do me a favor and hit the like button, it helps move this up in the algorithm so that more people can find this content on YouTube. It also lets Connie and I know that you found this valuable. We did 3 bullish trades today. We did one on NEM, Newmont Mines, one on AMD, and one on Apple. All of these were long calls. So we bought calls and all of them have short-term targets. 2 are swing targets and Newmont is a 1 ATR target. So come back on Friday. We'll follow up on these and more. We didn't get to look at the buy rights we have on INTC and GFS, but we will definitely look at those Friday because those buy rights, I believe, expire. Those covered calls expire on Friday. So thank you so much, guys. Thanks to Connie and the guys behind the scenes. Have a really awesome day. And I will look forward to seeing you in a webcast coming up soon. Take care. Up next, Mr. James Boyd.